What is the liberalized remittance scheme in India? The liberalized remittance scheme, or the LRS, is a scheme under which a resident Indian, including minors, can freely remit up to 250,000 US dollars in any financial year for permissible purposes on either the capital account transactions or the current account transaction, or a combination of both. If the remitter is a minor, the parent or the natural guardian must countersign the LRS declaration form. The scheme is available to individuals, not to companies, HUFs, or trusts. The only exception is the sole proprietorship form, and you must check that out separately. Of course, this is an overview. You recognize certain terms shall be applicable to such transfers. What is capital account transaction under the LRS for resident Indians? Capital account transaction is one where you transfer funds to buy or sell financial or fixed assets abroad, which adds to or reduces your assets and liabilities outside India, or vice versa if you live abroad. Examples of capital account transactions are transfer of funds by a resident Indian to buy or invest in financial or fixed assets abroad. Financial assets such as shares of foreign companies overseas, Amazon, Google, Microsoft in the US as examples. Or fixed assets such as purchase of property outside India, let's say Dubai for example. What are the permissible capital account transactions under the LRS? The permissible purposes are, under the LRS scheme, the following. Opening a bank account abroad, that is a foreign currency account, investments on shares, mutual funds, bonds, and other debt instruments overseas. Purchase of property abroad, setting up wholly owned subsidiaries and joint ventures abroad for business operations. What is current account transaction? Transactions that are not capital account transactions are called current account transactions. Example, pay for your foreign travel, travel for work or vacations, seminars, conferences, pay for medical treatment, pay for the tuition fees and other expenses for your kids studying abroad, pay for living expenses of someone in the family abroad. You may even give to someone or donate for a particular cause. You may be going abroad for employment or immigrating permanently to some country, and you may take the money because you obviously need it there. I must add, expenses to travel to Nepal and Bhutan are not covered by the liberalized remittance scheme. What types of payments are allowed under the LRS scheme? When a resident Indian makes a local payment to a close relative who is an NRI, it can be either a gift or a loan. These transfers fall under the purview of LRS and therefore subject to the limit of 250,000. Who can the close relative be in the context of LRS? Mother, father, brother, sister, husband, wife, son, daughter, son-in-law, daughter-in-law, can even be stepmother, stepfather, stepson, stepbrother, stepsister, and so on. What are the prohibited items under the scheme? The LRS cannot be used to transfer funds overseas for specifically prohibited purposes such as purchase of lottery tickets, banned magazines, and other items prescribed or restricted under Schedule 1 and Schedule 2 of the FEMA regulation. You cannot remit for margins or margin calls at to counterparties overseas. You cannot remit to purchase convertible bonds issued by Indian companies in foreign markets, not for trading in stock exchanges abroad, not to countries under the Financial Action Task Force, whether directly or indirectly, not to people or entities on the negative list, whether directly or indirectly, issued by the Reserve Bank from time to time. What are some examples of current account transactions under the LRS? Within the overall LRS limit of 250,000 US dollars in a financial year, you can send money to pay for your foreign travel, travel for work, vacations or seminars, conferences, training, and so. Except Nepal and Bhutan, you can pay for medical treatment or even medical checkups before that. Pay tuition fees and other expenses for your kids studying abroad. Pay for the living expenses of someone in your family who is abroad. You may even give to someone or donate for a specific cause. You may have found employment overseas, or you may be immigrating permanently to some country, so you may transfer the money there because you obviously need it. These are some of the more common reasons for current account remittances under the liberalized remittance scheme. Now, this list of current account remittances is suggestive, not exhaustive. There can be several other reasons which I did not cover under this list, but are allowed under the FEMA without taking RBI's permission till as long as they are not prohibited or restricted under Schedule 1, 2, or 3 of FEMA Rules 2000. All you need to do is to persuade the authorized dealer that the transaction is for a genuine purpose. Can remittances under the LRS facility be consolidated by family members? Yes, you as a family can consolidate remittances under the LRS scheme, provided that each family member stays below the LRS limit of 250,000 US dollars in the given financial year. However, and this is important, the scheme does not allow the family member just to be a conduit for the transfer of funds. Clubbing would be allowed only if the clubbing shall result in each member being a co-owner in the asset that was purchased with the funds, such as being a co-owner of the property or joint holders of the bank account, and so on. Can a resident Indian make a foreign currency gift under the LRS to another resident Indian if the latter has a foreign currency account overseas? No, a resident Indian cannot make a foreign currency gift under the LRS to another resident Indian just because the latter has a foreign currency account overseas. Are there any restrictions on the frequency of the remittance? The question, in other words, is whether there is a maximum number of times that you can transfer funds abroad. No, there are no such restrictions. You can remit funds under the LRS as many times as you wish, provided that the total amount that you remit does not exceed the 250,000 US dollars in financial year. Once you hit this limit, you shall not remain eligible. Is it mandatory to repatriate the returns on the investment made using the LRS scheme? In other words, the question is whether you require by law to bring back the returns that you earn on investments made using the LRS scheme, dividends, interest income, gain on sale profits, and so on. No, it's not mandatory. You can keep the returns overseas itself, and in fact, reinvest the returns if you wish to abroad. There's an exception only if you made direct investment in equity shares or convertible preference shares of a joint venture or a wholly owned subsidiary overseas, in which case there is a set of rules under the FEMA Act. Please check that out separately. Can remittances be made only in US dollars? The 250k US dollars is only a representational amount. It reflects the quantum of money that can be remitted under the LRS. You can remit an equivalent amount in any freely convertible foreign currency. British pound, UAE dirham, Australian or Singaporean dollar, the euro, and so on. What are the limits with respect to the LRS? Currently, any resident individual, including a minor, is allowed to remit up to 2.5 lakh US dollars in any financial year. At an exchange rate of 73 rupees to the US dollar, it is about 18 million rupees, or let's say 1.8 crore rupees. Do you need prior approval to open foreign currency account with a bank outside India before using the LRS? No, you do not need such approval. It is only when you remit money under the LRS that regulation kicks in. How can a resident Indian make a rupee loan to an NRI or a PIO who is a close relative of the individual? You can, as a resident individual, give a rupee loan to an NRI or a PIO who is a close relative, provided that loan amount is within the overall LRS limit of 250,000 US dollars in the financial year. You must credit the loan to the NRO account of the person. However, there are certain conditions such as the loan is interest-free, the minimum duration is 1 year, the money must not be remitted outside India, the loan shall be used to meet the borrower's personal requirements or for his own business purposes in India, and not for activities that are impermissible for NRIs or PIOs, such as a needy company or agricultural activity, and so on. The NRI must repay the loan with an inbound remittance from overseas or from one of the NRI type of accounts in India, like the NRO account, the NRE account, or the FCNR account. Can a resident individual make a rupee gift to a close relative who is an NRI or a PIO? Yes, you can. A resident individual can make a rupee gift to a close relative who is an NRI or PIO. Remember that the money must be credited to the NRO account of the person. Also, make sure that the gifted amount is within the overall LRS limit of 250k USD per financial year under the LRS scheme. Can a person resident in India hold assets outside India? Yes, of course you can, provided that the asset was purchased by the person when he or she was resident outside India, as in NRI or PIO, or may have inherited the asset from a person who was resident outside India. If you are a resident Indian, you still can own assets abroad, such as stocks and bonds or properties outside India under funds transferred using the Liberalized Remittance Scheme, or so the LRS scheme. Hope this was useful. If you have any questions, send us an email. Or if you want us to cover any particular topic, please let us know. Our address is questions@nrinotebook.com. Again, that is questions@nrinotebook.com. See you soon.